Good morning on this very cold fall day here in Minnesota, at least. Beautiful day outside. Sun is out there. Absolutely gorgeous. I'm looking at the leaves. Taking a look at the markets, though. That's not looking quite so gorgeous. As a matter of fact, yesterday we didn't have that great of a day in the markets either. Some pressure on the markets, specifically on the NASDAQ. NASDAQ down by noon. We were down over 100 points. Looking over at the Dow itself, down about 150 points. And it was just kind of wavering back and forth, but certainly there are catalysts out there that are moving it. And as we've gotten a little bit deeper into earnings season, we talk about the banks all the time. It's not just the banks, but certainly seeing the pressure that's been implied in terms of where we are seeing pressure, certainly the banks that stand out. We've gotten some great numbers out of some of the banks, some of them not so great. But in any case, both are getting hit to the downside and not able to hold on to some of those gains. So it gives you a little bit of a sense of the sentiment still for some of these financials. Volatility continues to be in that range, 26, 27. Yesterday, that's exactly where we were, for the most part, hanging out for the majority of the day. Volumes explosive again, about 29 million contracts trading yesterday. So we continue to be on this incredible pace. Everybody's looking for ways to leverage or hedge or put on risk positions that are less risk based upon using the options over the stocks. So many stock replacements that are going on as well. Just a myriad of different ways that people are able to play in the markets, and obviously the derivatives markets themselves. That's why we are seeing this incredible volume that we talk about each and every day. That's why we're here. That's why we follow the smart money. Explosive by midday yesterday, some huge volumes. Take a look at the volume that we saw yesterday from Apple. Call it a little bit over 2 million contracts. You know, it was just under 2 million contracts. NEO, and that was one of those names that we talked about and had hit on multiple occasions. 2 times in the same day. We talked about that, highlighted it, just a big run to the upside from, call it, the 21s towards the 25 levels, and just an explosive move, and an incredibly explosive move when you look at where those options were and those percentages of gains based upon what they were buying and when they were buying those particular options, and in a very short time frame, just literally hours, for that explosive move to the upside. We also had some great activity in Tesla as well. Tesla, a little bit over 1 million contracts yesterday. So we had 29 million contracts total. You add these up, we're a little bit, call it somewhere in the ballpark of 5 million contracts in 3 stocks. So very, very heavy. But we also had some huge call buying in terms of the calls versus the, I shouldn't have said buying, calls versus puts though trading. Baidu, NEO, AAL, just monstrous calls versus puts. The activity on the call side, certainly something that really did stand out. So yesterday we had a modest day in terms of volatility. We talk about 26, 27. We were in a very tight range yesterday. There's no doubt about that. Markets kind of held on after they had those drops down toward the middle part of the day. Dow finished down about 165 points. NASDAQ, call it about 90 points. What was really dragging on the different indices yesterday? Well, the Dow, certainly United Health, that was down significantly. Salesforce down as well. Disney, Walmart, Home Depot, you get the idea. The NASDAQ, you had some strength out of Baidu, some Tesla, some Qualcomm, but weakness really in the big names. Illumina, Amazon, Netflix, those kind of names. Insight. So it gives you a little bit of an insight in terms of what we were really seeing. What was the breakdown yesterday? And it was essentially, it wasn't massive, but it was certainly very consistent in terms of different categories all sort of moving together yesterday. Seeing something somewhat similar to that today. As a matter of fact, tech really was the area that was sort of the drag, because we've got so much tech exposure now within the Dow, obviously in the NASDAQ and in the S&P. So Apple, Microsoft, Netflix, T-Mobile, I'll just throw in there too, because of all the talk. Everybody's moving towards, hey, what about this whole 5G category? When is it really going to be kicking in? All the rest of that. So a lot of different reasons why we are seeing some of those stocks that are shifting and moving around. Biotech yesterday, so it's not just technology the way you're thinking about it, but biotech yesterday down about 2%. Many of the consumer names not getting hit hard, but down 1% just across the board in Starbucks and Amazon and Home Depot and Nike. Throw in Dollar General. So across the board, seeing a little bit of that pullback. So what are we seeing today? Start off today, pre-market down about 340, 350 points in the pre-market in terms of the Dow. About 180 points on the NASDAQ. We haven't seen anything quite at that level since we opened up. S&P down about 32. We opened, suddenly we're only down 280 points, shaved off some of that. NASDAQ got cut in half, down about 95 points, and the S&P about 35. Now, very quickly, we're starting to see things shift around. Now, the Dow has improved. It's down 230 points. NASDAQ down about 155 points, so that's not looking so great. We're starting to approach back down to that lower end where we'd seen in the pre-market, as I mentioned, down about 180. Looking at the S&P right now, down, call it 33 points, so about 1% on the S&P. Understandable why we're looking at a VIX right now as it's starting to edge to the upside. It's up, well, I shouldn't say edge, it's up 2 points, up at 28.40 right now. So a pretty active day already. We are seeing that right now. Why? Because of the three various areas of influence on the markets right now, the catalysts right now. Stimulus, that's still the focus, and that will continue to be the focus day in and day out as we get closer to the election. And are they ever going to be able to come together at the table and get anything done? Jobless claims today, not very good whatsoever. 898,000, expecting about 825,000. That was an issue. And the coronavirus, once again, starting to pop up and be a big part of the conversation once again. So that's certainly something that's dragging on the market. So early on, when I look over at the Dow, there was only one stock in the green. That was Walgreens. They had some great numbers today. They beat on the earnings. They beat on the revenue. They were talking about some of the forecast. That stock up about 5%. Other than that, everything else at the last I looked was in the red. And I'm sure there are some, not everything was just deep red, but there are some stocks definitely wavering around. So we might see a few names join in on that side, especially because of the fact that we are no longer down 300 plus points on the Dow. We're down 220 points on the Dow. So the drags early, what was really the heaviest drags? A lot of industrial names. Take a look at Boeing, Honeywell, Dow, all of which are down about 1% or so. Then look at these financials as well. Goldman, JP Morgan, American Express. So you're going across credit cards, all sorts of different areas, down about 1% as well. So financials with a little bit of pressure. The NASDAQ, now we've been talking about the semiconductors and how they've been somewhat Teflon for a very long period of time. Well, they aren't getting slammed today, but they're down a little over 1% as well. That dragging on the NASDAQ also. So if you're looking for a little bit of a bright spot, well, you can find a little bit of green in Netflix right now. You can find it in Zoom as well. So not all going to the downside, but you got technology down about 1% right now. So got to hit some unusual option activity that we're seeing. We've seen unusual in here twice now in just the last couple of trading sessions. So FireEye, this is a name that hits a lot. It used to be a name everybody said, well, you know, this is takeover candidate, all this kind of stuff. Maybe it is, maybe it's not. That's really not something that much importance. There's too many times where people jump to the next level and they jump to conclusions about what they think. Could it happen? Sure, absolutely it could happen. But when we're talking about security and cybersecurity, all the rest of that, take a look at FireEye trading right now about $14 a share. And at that time, 5,000 of the October 23rd expiring, so it gives you a little bit of time. We are at Thursday. These don't expire Friday, but we are already at Thursday. So this does give you a little bit of time next week, obviously. The 14 and a halves. Only 30 cents right now, but that was the buy that we were seeing. So it is going to have, the stock's going to have to make a decent move, but it's going to have to do it and does have a little bit of time. If you can include today, tomorrow, and all of next week for the stock to start to make that kind of a move to the upside. Obviously, we know things like that could happen in a short period of time, hours or in a day. But at the same time, I like the risk reward of trade like this. We talk about this all the time, the dollar amounts and all the rest of it, so that you understand where you are and what's going to have to happen. Obviously, time, that's going to be a factor. But as the stock starts to edge up towards 14 and a half, then depends on the velocity of that move, whether or not these options can actually move. Our guys at Market Rebellion can school you on that all day long. They are the best. They understand it. Knowledge is king. That's why we love this derivatives market, though. Following the smart money each and every day, it gives great opportunities. Does not guarantee anything. The opportunities are there. The opportunity for success is there. Doesn't always have to come through. There are times where, hey, even the smart money that we're following oftentimes is not right every single time. There's no doubt about that. We see that happen more often than not. But the risk-reward factor is what really counts, and that's what we're here for. We're trying to get that into the right way where you can have the better side of risk and reward for each and every trade that you're trying to put on. That's what our guys try to do here that are educating you in the biggest growth area in the markets. 29 million contracts again today, yesterday. Folks, have a great day of trading. I will see you tomorrow. I got a biggie tomorrow. I got some radio going on, got the take going on, got the halftime report going on. I got CNBC Fast Money Friday going on, and then following that up, we got our cocktail hour as well with the Market Rebellion folks. So really going to be a busy day tomorrow. Look forward to it. Guys, have a great day of trading.